Well, good afternoon, everyone. Welcome to the 10-Minute Investor. Todd Schaefer here with you. Let me get my technology all in order here. And now we're ready to begin our presentation. Thank you for attending the 10-Minute Investor, where we're going to show you how you can consistently outperform the market in less than 10 minutes a day. And as a point of clarification, that 10 minutes a day is not your holding period. That's how much time you're going to invest on a daily basis to manage your portfolio. So instead of some kind of hectic, frenetic intraday scheme, this is the other end of the spectrum. And the reason we have a picture of a guy in a hammock here is it's a much more relaxed, non-pressure kind of event. All right, and we can still get success in the markets without a lot of muss and a lot of fuss. So that's our big promise to you from this presentation. If you implement the things that I'm going to show you today, you'll be able to invest with confidence and actually outperform the market in just a 10-minute a day routine. That probably sounds attractive to you, particularly if you've experienced any of these things, right? Maybe you're tired of buying stocks only to see them drop right after you buy them. Sometimes it feels like the market maker is sitting there watching for your order just so they can sell out from underneath you. Or maybe you've had a little bit of frustration because you just don't know when to sell a stock, right? And sometimes maybe you even watch winners turn into losers just because you didn't know when to sell. Or maybe you're participating in modern society where we're all time crunched and you just don't feel that you have any time to manage your portfolio effectively. Not to mention develop the skills you need to do that. Or maybe you've just lost confidence that you can actually make money trading stocks because of the things that have happened to you in the past, right? It only takes a couple big hits before you can really be shaken in your confidence level of being able to trade stocks effectively. Or maybe you're just looking for simple ways to buy the right stocks at the right time. Well, if you're any of those folks, I think you'll be interested in today's presentation because I'm going to show you several important things. The first is I'm going to show you how to become more consistent in your performance, how to move from inconsistency to consistency, right? So in this section, we're first going to make or identify some of the mistakes you've probably been making. So we're going to talk about what they look like and what not to do. So just by eliminating the negative behavior, right, that'll help you out. But then we're also going to turn the corner and take a look at the proactive things that you need to do to get that consistent performance. The second section of the presentation today is all about buying stocks. So I'm going to give you a 3-part stock buying checklist, same checklist that I go through when I'm looking for stocks that I want to buy. In this section, I'm going to show you what to look for. I'm going to show you some examples, and then you and I are going to go together into today's market data. And actually, I'll use a tool that I use. We're going to look at some stocks that you would be willing to or consider buying on Monday. All right, so a very practical benefit of being in the webinar today. All right, and then finally, we're going to wrap it all together by putting those first two pieces together and put it into a 10-minute routine that you can do on a daily basis. And of course, that's why we call this the 10-minute investor. It's a 10-minute routine that you can do each night to manage your portfolio. It's the same routine that our clients use, the same routine that I use. In fact, it originated with one of our clients back in the financial crisis, right, when he was just totally stressed and overwhelmed by the things going on in his life and his portfolio, right? He implemented this plan and really turned things around. So I'll introduce him in a minute here as our case study. All right, but those are the 3 big chunks, if you will, of the presentation today. If you stick around to the end, and I hope you will, I'll share with you a template that you can use to help craft your own personal trading system or your trading plan. All right, so I'm going to hand it out through the GoToWebinar toolbar. I'll just drop it in there and you can get it right away. All right, so we will have Q&A at the end of the presentation, although I encourage you to participate during the presentation because that makes it more dynamic, and I think you get a little bit more out of it if we can, or to the degree that we can do that. All right, so every group is different, but the way I like to start off this presentation is to have you reflect for a moment and share with the class, if you would, what has been the hardest part about making money in the market for you personally, right? Particularly if you find your place or yourself consistently struggling in one particular area, what is that area? Right? What's the hardest part? Your answers, and go ahead and click them in if you will, right? Your answers are typically going to fall into what I call the three buckets, right? They're typically, when should I be buying stocks? When should I be selling my stocks? Right? And what stock should I be buying? Right? We call those the three pillars of a trading system, if you will, or the three buckets, as I said. Right? So for Thomas, thank you for initiating us here, picking the right stocks. Right? There's only 11,000 active stocks out there, right? So how do I know which one to pick? Right? So that's an interesting twist. How do I know I made a good trading decision? Well, you made a good trading decision if it's successful, right? So we'll get into that a little bit. But again, these answers are falling into those three buckets is the key, right? So as we open up our conversation today, first of all, I want you to think about, in particular, the place where you're struggling and how we have some solutions for those struggles. But let me also set the table here and remind us that most of us, as individual investors, most of us struggle, right? Just generically, the research shows us, in fact, that the average investor's returns have trailed considerably the S&P 500, right? In fact, that's kind of the reason there's a lot of ETF investing going on now, right? So over the past 30 years, the individual investor, the individual fund investor is underperforming the market. Right, well, when you're in that model, it's not surprising that you start getting frustrated, right? You keep doing what you're told you should be doing, and yet you're underperforming the broad market. So in that frustration, you turn your anger toward the market. Blame it must be the market gods or those evil market makers who are working against you. Right? Or maybe the problem isn't them, maybe it's you. Maybe you just stink at this, right? And you can't do it. Well, before we go down that rabbit hole of, the negative loop, let's pause for a minute because I'm a big believer in performance psychology, whether it's, in sports or whether it's in trading, right? Let's instead break that cycle and think about what it looks like if you can do this well, or when you do it well, right? When you're trading successfully, the stress disappears, right? So you don't have to worry or stress about your trades because every trade is under control. You're under control. Your investments are under control, right? So if you can trade successfully and go confidently into each of these trades, that leads to trading with confidence. And from a performance psychology basis, that makes all the difference, right? Going into the expectation that you'll be able to trade this successfully. Even if you have losing trades, which you will, I get it, right? But even in the losing trades, you can lose on a trade and still be confident that you and your system are effective. All right, so let's talk about moving from that inconsistent performance to consistent performance. And we like to start this off by identifying the 4 biggest mistakes that we see people making. VectorVest has been coaching and supplying data to individual investors now for over 30 years. So we've seen some things. I almost feel like I'm doing State Farm commercials, the insurance commercials. We know things because we've seen things. So here are the 4 big mistakes, and this is an opportunity for you to reflect on your own performance and identify which of these mistakes you may have been making. All right, so let's take a look. The first big mistake that we see folks making is that they're thinking of the money first. Now, I get it that investing is all about growing your capital base, right? Understood. But what happens is, again, and this is more of a psychological twist or nuance to this understanding, is that when you're thinking of the money first, you're thinking of the reward, whether it's the new boat or the new house or the secure retirement, whatever, right? You have an emotional attachment to that objective. If you think back to the successes you've had in your life, whether it's in your career or in a sporting event, maybe your golf game, right? When you think back to those successes, did those successes come because you focused on the reward, or did those successes come because you focused on the fundamentals that delivered the reward? And that's the impact or the importance of this for our trading, right? Successful portfolios come from making successful trades. And the problem that you set yourself up for, the mistake that you set yourself up for, is when you think of the objective first, particularly if you have an emotional attachment to that objective. When you start having failures, right, if you start seeing the dream slipping away, it naturally breeds an emotional response. You start getting anxious, right? And that leads to making emotional trading. Well, what's the problem with emotional trades? Well, when you're thinking or being emotional or making emotional decisions, particularly when the market is up or down with a lot of volatility, which is in our recent past, so maybe you're there right now, right? When you're making those emotional decisions, they typically aren't good decisions. Or I like to say they're at least not the same decisions that you would have made had you stayed in your rational self, right? So let's use road rage as an analogy here. If you think back to your last road rage incident, right? You're going through the conflict. The conflict finally resolves, and then you're replaying it 1,000 times in your mind, right? As you analyze that situation post event, have you ever been proud of how you acted? Right? Even if the initial blush you knew you were right, but then you're thinking, well, I didn't quite handle that very well, did I? Or certainly not the way I would have handled it had I not given myself over emotionally to, that emotional response. Had I stayed in my rational self, I would have been much happier with my performance. Fair enough? All right. So the key here is that when we give ourselves over to our emotional self, we don't make the same decisions we typically would made had we stayed rational, and they typically aren't good decisions, right? That lead to good outcomes. So let's play a little game. It's a quiz. I know I just made you nervous, right? A spot quiz? All right, my game is called Have You Ever Said? I'm going to present to you 5 sentences. And I want you to reflect on whether or not you've said any of these 5 sentences as it relates to a stock trade. All right, so we're focusing just on your trading now. So, if you have, jot it down. This is a personal inventory for you. Okay. Sentence number 1. I know it's down now, but it'll come back. Have you ever said that related to a stock trade? How about number 2? It's already down 20%. I might as well hold on to it now. How about number 3? I have a profit, but if I close now, it'll probably keep going up. Number 4 on Have You Ever Said? I know I lost more than I thought, but if I close now, it'll probably go up tomorrow, or at the earnings call, or right when the patent gets approved, or whatever. How about number 5? The last time I sold a stock, it kept going up, so I'm not selling this one yet. So those are my 5 Have You Ever Saids. So I ask you, have you ever said? If you want to share with the class, go right ahead. But I'm willing to wager that you've said at least one of them. Rick says he said every single one of them. So congratulations, you're an outperformer. Right? But I'm guessing there's some other outperformers in the group. So, okay, you've said one, maybe you've said all 5. Have you said any of them more than once? 3 out of the 5 says Mike. Dave says 1 through 4, right? So, yeah, here's the thing, right? Why is this funny? Well, because all of us have done it. But here's the key. If you've said any of these things, particularly if you said any of them more than once, what's the underlying connection? They're all emotion-based statements. So if you've been saying any of these things before, during, or after a trade, you've been trading emotionally, making emotional decisions in your trading. And what did we just say about emotional decisions? They're typically not the same decisions you would have made had you stayed in your rational self, and they're typically not beneficial. Ouch, right? So here I'll restate it and be even more emphatic. If you're thinking any of these things before, during, or after your trades, you will not be successful because you're sabotaging yourself at multiple turns, right? So the solution to trading or making emotional decisions is to build in a system. You have to have a system which keeps this an intellectual exercise, not an emotional one. Right? And then you just refer back to the system to help you make your decisions. So let's pause here for a minute because my screen is filled with people who've said they've been saying these things, right? So I just had you relive the emotions of revisualize these bad trades. We just talked about your road rage incidents, right? So let's get back to our happy place. By the way, did you notice, as you relived some of those events in your mind, did you feel the knot in your stomach? Did you feel some of that anxiety creeping in even though it was in the past? Right? That's a little yellow flag that you can be sabotaging yourself. So for now, let's just close our eyes, couple deep breaths, get back to your happy place, or at least something that's emotionally neutral, because we're still on the first mistake. We still have 3 more to go. Now the rest, admittedly and thankfully, are more mechanical, but let's move ahead. Our second mistake is that we see folks that buy stocks that are going down. Right? This is kind of an industry wisdom thing, right? Most of us, when we got into investing, well, you get into anything new. I don't care if it's stamp collecting, right? You take on a new endeavor, you don't know much about it, you're interested in learning. So what do? Well, back when I started investing in the 70s, you went to the library and took out all the fat books, right? Now you go on the internet and you look at YouTube videos, I guess, right? But the idea here is you're trying to turn to people who have done it successfully and gain from their experience, right? To avoid mistakes. It's natural. So here's my question, with maybe the exception of some of those YouTube videos, but the books, the commentators on TV, right? Those people who are presenting that guidance, we like to call them the gurus. They're products of the industry who have been operating in the industry successfully, right? Those are the guys that are telling you to buy stocks that are going down, right? And why? Well, because they're getting cheaper. You can buy more shares for the same amount of money. And if you continue to buy shares as the price falls, you're lowering your average cost, right? And therefore increasing your profitability should the thing bounce, right? Well, therein lies the problem. All of those things are true, right? But there's a problem that they don't address, or that approach is not addressing. While these things may be true, you're more likely setting yourself up for failure than you are for success. Because this is what happens a lot of the time. Here's a stock chart of Windstream Corp. And I don't care that it's Windstream, just let's look at it as a generic price chart. I'm looking at a 1-year time frame. This, by the way, is an example, a real life example that's brought to us by one of our subscribers in one of our coaching sessions. I'll talk about that here in a little bit. But the key here is this is the graph, or a generic graph pattern that same industry wisdom would say is ripe for a buy now. It's just coming off of its 52-week low. It's taking a bounce, right? How much lower can it go? Right? So let's jump in and we'll ride this puppy back up to its former glory. Right? Well, the extension of that logic would mean that I could have bought it here and here and here and here. And what ends up happening a lot of times is you find yourself just buying the next lower high or the next lower low, depending on your approach. Right? So the person that brought this to our attention in our coaching session said, in a webinar just like this one, hey, what do you think about Win? I just bought it 2 days ago. So the orange date line I have on here is the day of the coaching session. Steve, the person, bought the stock 2 days ago, which means he bought this last green candle. I hope you can see that. Right? He buys it. 2 days later, the stock pulls back on him right out of the box. Right? Congratulations, you have a losing trade position. So, ever happened to you? Well, of course it has, right? It's happened to all of us, and I'm not here to tell you that it won't happen in the future. The key difference is that you're going to know what to do about it after today. But we talked to him about this trade, right? And the good thing is that after we talked to him, his next response was, well, okay, I'm selling it now. So I'm going to show you specifically what we talked about, but the main point I'm trying to get across at this point is that when you buy stocks that look like this that are in downtrend, they typically continue to drop, not to bounce, right? So for example, Windstream continued to drop another 10% in the next 2 weeks, and a total of 62% before it actually took the next major move, and now they were delisted and have reorganized, if I'm not mistaken. I haven't tracked them, but it was not a successful trade, right? So keep this in mind. What you see in the past is most likely what's going to happen in the future. Being taught to buy stocks that look like this and that are falling sets you up to make the third mistake. And that third mistake is to hold on to these losers too long, right? So you buy that Windstream stock, and what happens? Well, they're holding on to it, hoping and praying for it to come back, right? Or, well, okay, it's still moving a little bit lower, but it should turn any time now, right? The talking head guy on TV said it would, right? The worst thing you can do is take a stock position and not have an exit plan, right? It's like jumping out of a plane without a parachute. If you look back at that Windstream trade, a lot of us would have just sat on that trade, hoping and praying for it to come back, and then you find out you're still holding it weeks, months, sometimes years later, right? Well, there are a couple things that are going on. We talk about the psychology of trading. I want you to consider this. First of all, yes, this stock is much lower in price, and while you haven't closed the position, so you haven't actualized the loss, it's still a loss, right? If you came under financial duress and needed to liquidate the position to raise money, you're out the money, right? It's worth what you can get for it today. But the second part of that is you have money tied up in this trade, right? So there's an opportunity cost here. First of all, even if this stock does recover, what's it take, another 6 months, 6 years to get back to your cost basis? Right? So there's an opportunity cost here of not being able to put the money that's tied up in this trade into a trade that's actually going higher. And the third, and maybe most insidious of them all, is that every time you open your portfolio, here is this trade in double-digit red numbers. You look at that, the first thing you do, it's just human nature, right? You go look at the big loser first, and you go, oh my gosh, it's down again. I stink. What's that doing for your performance psychology, for your confidence? Come on, let's go put on another trade, right? Particularly if you're buying stocks that are in downtrends, right? As I'm playing that back, a lot of you, I'm envisioning nodding, right? And you're feeling that gut wrench, right, in your stomach that, yeah, I'm going to go lay down another $5,000 on another stock that's doing this, right? Here's another example, right? Another coaching session, this time a woman, she'll remain anonymous, brings us this stock chart. Right? And unfortunately, she bought it up in the upper left corner. It has now been falling for an extended period, over a year, right? So we had the same conversation, right? And it came down to us questioning, well, okay, you didn't have an exit plan, obviously, right? Why haven't you sold it yet, right? How much pain do you need to go through? She says, well, the problem is really that I don't have an exit plan. My husband thinks the stock is going to come back, so we're still holding on to it. Right? So by not having the exit plan predetermined, not only has it taken the big monetary loss, all the things that we talked about in the prior example, It's also causing unneeded stress in her marriage, where had they just agreed at the time they took the trade when enough was enough, they would have avoided the whole mess. And of course, buying stocks that are rising instead of falling might have helped a little bit too. All right. Mistake number 4. We see folks ignoring the broader market's direction. And this one is huge. And I'm guessing most of you have lived through it, right? Because for years, well, decades, maybe even longer, right? The gurus, right, those industry pros have taught us that buy and hold is the way to go because you can't time the market, right? So the problem that sets up for us is, of course, just like the roller coaster, right? Because you're signing up for a roller coaster in your portfolio, the way up is slow, right? But the downdrafts, anything but, right? And usually, in fact, they make your tummy tingle a little bit, right? So I'm guessing there are people in the room who remember either the dot-com bubble burst, or maybe if you're younger than that, you at least remember the housing bubble burst and the global financial crisis that followed it in 2007, 2008, right? But I lived through the dot-com bubble burst. You finally clear the decks here in 2000. It takes you another 6 years to get back to the next high. And of course, what? Probably 5 years before you got back to break even. Then what happens? Well, you get into just the financial collapse, right? Average mutual fund pulls back 40%. The S&P 500 about the same. So in the 6 years it took you to get back on your feet again, you lose it all in another year, year and a half. Right? That's what I call a roller coaster ride. And the problem is when you lose 40%, you have to gain back 66% to get back to break even. So I know a lot of you out there have kind of a rough 10% annually, 10% annual rate of return as a good benchmark of the market's performance. Well, you just signed up for a 6.5 year recovery period to get back to where you were. That was kind of a breakthrough aha moment for a lot of folks who thought, well, geez, this pulled back 40. Had anything I could have minimized or reduced that pullback from 40 to maybe 30% or 20%, anything I could do to minimize the drawdown would have set me up for the recovery. And I'm not looking at a 6-year recovery. Maybe I'm looking now at a 1 or 2 year recovery. By the way, that's only true if you had the courage to get back in after the market put in its low. Right? And I tell you, through this time frame, there were people who sat out the market for years just because they were remembering the sting of that market retracement. All right? Well, that happened to our case study subject here. His name is Robert. He wrote us a letter and he said he had retired in 2005, but when the financial crisis hit in 2007, he said we had used professionals to manage our direct shares and a few managed funds to build up our retirement portfolio. They all told us to ride it out. By mid-2008, our portfolio had lost 40%. Our retirement plans were in ruins. We were in total despair, and it looked like I'd have to get a job. Right? So Rob is going to be our case study, and we'll talk about how he fixed his situation. But first, before we do that, let's pause for a minute, and let's do a little gut check, a little personal inventory again. All right, so we just went through the big 4 mistakes. Thinking of the money first, buying stocks that are going down, holding on to losers too long, ignoring the market's direction. Right? Those are the big 4. Pause for a moment, and I actually encourage you to write these down because there's something about writing it down that solidifies it in your mind. Which of those 4 mistakes have you made? And you may have made more than one. Right? But identify which of the 4 you've been making, because obviously you want to eliminate them. Let me twist the knife. Have you made any of them more than once? And now I'll plunge it all the way. How much did it cost? Okay, so of those mistakes, which one cost you the most in hard dollars, not a percentage, hard dollars, and I want you to actualize the number. Don't give me I lost 40%. What was that in money? Why is that important? Because I want you to recognize that making these mistakes has a real cost in real dollars. And if you're serious about your financial future, you're going to recognize that you have to eliminate these mistakes if you're going to be successful. Right? All you have to do is make that one mistake and you sabotage yourself for another dozen years, right? Well, if you do that after you've retired or approaching retirement, you're in trouble. All right, so we're going to eliminate these mistakes, right? And hopefully you've made a personal commitment that you're going to do that. So let's go back and talk about now how we can fix the situation and eliminate the situation. I'm trying to come up with a nice way to say that, right? So the big problem here, right? The underlying problem is that the model that you've been using to invest, that model or that system is broken. You had a broken system if you had a system at all, because I know there's a lot of people out there who just kind of buy stocks when the economy's doing well and they're reading about how much money everybody's making. They go out and they buy stock in their favorite retailer or company that they do business with, or maybe pot stocks because they heard that's the next big thing, right? Whatever. They buy those stocks, put them on the shelf and forget about them. When the economy turns sour or they start hearing about how much everybody's losing, they look at the portfolio and they go, oh my gosh, and they panic and they sell. That is not a system. Right? In fact, we know that's a good way to lose money. All right? So let's fix it. What do we want to do? Let's install the correct system. So I'm going to share with you the system that we use with our clients, the system that we teach and support with live coaching every week. We get together and we focus on these 5 steps. I'm going to draw it out as a triangle, and I'm going to segment the triangle into 5 sections, 5 steps. Right? Make sense? All right. So the first step to building a system is you want to have a way to analyze stocks. Right? You need to be able to analyze any stock that you own, any stock that you're interested in owning, and know whether it's over or undervalued, whether its earnings are rising or falling, and how safe it is. Right? So take an inventory of all the stocks you own or you want to own and understand them from those 3 perspectives. Over or undervalued, earnings rising or falling, how safe is it? The second step of the system is that you want to know your exits. Right? Because you don't want to hold on to your losers too long. So you need to make sure every stock you own has a stop loss in place to minimize your risk. To define it and minimize it, right? In other words, you want to know your exits on every trade. Third, you don't want to ignore market direction, so you want a definite signal or rule in place to make sure you know when the market is rising, so you know that it's okay to be buying. Some people use moving averages on the S&P. You know those same gurus who tell you can't time the market? Well, a big institutional methodology is called the Golden Cross. Maybe you've heard of it. The 50 and 200-day moving averages on the S&P. When they're crossed bullish, the market's rising, so it's okay to be buying. So they're timing the market. Out of the same breath, or out of the same mouth they tell you can't, they do. The key here is we're not predicting the market's direction. We're simply identifying that it's rising. All right, so that Golden Cross is a little slow for us. I'll show you what I use here in a little bit, but the idea is you need a signal, a rule that identifies for you when the market's rising, because that's the best time to be buying stocks. If you were buying stocks in 2008, you got hammered. Right? All right. Fourth, you need a way to find good stocks. You don't want to buy stocks that are going down, so you want to find good quality stocks that are rising in price for your portfolio. So you need a technique to find those stocks that are likely to go up, not down. And then finally, you need to put it all together in a plan, because you don't want to trade emotionally. So you want a written plan, not just, some fantasy in your head. You should actually write it down. And I like to say, with enough specificity that you could hand it off to your brother-in-law, go on vacation, and he'd have no trouble running your account. right? So you need to write it down, because then you can not only apply it, you can also review it if you want to update it. So by using this 5-step process, it leads you to trade with confidence and generate consistent performance. So the first thing I want you to do is another little self-inventory analysis gut check, right? Take each of these topics, and if you do it well, right? So if you're, I don't know, really good at analyzing stocks, put a smiley face next to it or a star. If, however, you're weak in one of these sections, or you don't do it at all, or you do it but you don't do it well, put a frowny face, right? So if you never apply a stop loss to your trades, put a frowny face next to know your exits. All right, so what did we do, right? We just did another personal inventory of your trading system or lack thereof. So I ask you, what did you just learn about yourself? Well, a lot of folks at this point realize that they don't really have a system, right? Or they certainly don't have a complete system. And I noticed that by not covering that topic, by not knowing my exits, I'm setting myself up for failure, because things are going to move too far too fast and I'm going to have some catastrophic trades, right? So take this opportunity to lock in on where you need to grow, where you need to improve. So back on that triangle, right? Start with the frowny face that's highest in the list, because they build on each other as you move down. So if you never use stop losses on your trades, that's where you need to focus first, if that's your first frowny face. If you've got 5 happy faces, then I'm surprised you're even in this webinar. Congratulations. Rock on, right? Most of us, particularly at this point, don't have that kind of luxury. All right, so let's move on to chunk number 2 here, and let's start talking about how to find stocks that are good candidates, because obviously we've identified the weaknesses in your trading system, but we're not going to fix that in an hour. Right? The good news, though, is you now know what mistakes you've been making and where you need to work. So let's talk about how to find good stocks. And of course, I need to set it up again, because just like our first problem, the problem isn't necessarily all of our own, right? There's a lot of, I don't call it misinformation, but just not good information out there, not beneficial to us, right? And as Mr. Miyagi said, there are no bad students, just bad teachers. And the industry, unfortunately, is full of bad teachers. And even the good ones, a lot of times, are hard to identify, right? So when you take this on yourself, right, the industry has a way of just overloading you with not only ideas, but also data points, right? In fact, this industry generates a ton of data, right? I added a couple bullet bubbles here, right? But every time I give this talk, I think back to my first days of trading stocks back in the 70s. I'm looking at the newspaper, right? And the newspaper, they list maybe 4,000 stocks, and there's probably about 30 data points for each of those stocks, and they're all in like the number 4 font, and they're sorted alphabetically. And I'm looking at that list thinking, well, how am I supposed to get any information out of this, right? I'm going to look through 8 pages of stock tickers and pick one, right? So you just get overwhelmed by the data, right? And in fact, there are services out there who, for a small monthly fee, promise to provide you with a ton of data. And using this example, yeah, they do, right? I'm looking at this page going, well, yeah, there is a lot of data there, to be sure, right? In fact, so much data, I'm looking at it thinking, well, of all this data, what's the important stuff? Well, in their sample, they're giving me these 12 bullet points, so maybe those are the 12 most important data points. But I still have a problem. Let's say I understand how Merck and Company here is performing on these 12 data points. How do I compare this company to company XYZ, particularly if they're in different industries? Right? Have I really solved my problem? I would posit to you that the problem is not one of data. certainly not data quantity. The problem is one of information, right? I'm not being given the right tools to make an intelligent decision about what's a good investment and what isn't. The raw data doesn't necessarily get me there, right? It's like being a mechanic and being given the wrong wrench to turn the nut. You just can't get the job done because you don't have enough information. So what do we try to do? We try to glean the information and the wisdom or knowledge that's coming out of all that underlying data. And so what do? Well, we start looking at the data that's generated by the industry, right? You add to that folks like Mr. Cramer. I'm going to use him as an example, and it's not to beat up on Jim Cramer. Smart guy, he's made a lot of people a lot of money, successful in the market. I got it, right? Written several books. But just taking this quote from his book Mad Money, right? He says that, hey, if you want to take this on for yourself, you need to do homework on every stock that you own or that you want to own. And that means committing 1 hour per week per stock. Much less than that, and you might as well be gambling. Well, if you're holding a 20 stock portfolio, do the math, right? You just signed up for another job. And really, the subtext of this message is, well, yeah, you're right. So, you know what? I do this full time and I've been doing it for 20 years. So just send me your contribution and I'll let you know how well you did. Well, we saw on the Dalbar study how well they did, as a group. And, there's been a lot of statistical studies that show that this year's best performer probably won't be next year. So again, is that really the solution? Well, no, that's what got most of us to the point where we wanted to take this on ourselves anyway. So that's not the solution. But when we try to take on that adventure on our own, you end up looking at all that data and you just get totally overwhelmed and you fall into analysis paralysis. Right? I had a friend whose wife was managing their personal portfolio. She was looking at 200 charts a night. She was a technical trader. So she's going through 200 trades a night looking for her prescribed patterns, her setups. Have you ever looked at 200 charts a night? Talk about analysis paralysis. Well, you start looking at that. And if you've ever tried it, you start convincing yourself that you're seeing things that may or may not really be there. You're almost kind of snowblind, right? So again, the industry is not giving us the tools that we need to be successful. All right. So what do you want? Well, you need the tools that help you get what you want quickly. Right? And I would say reasonably easily too. Is that okay? Can I really stretch? Right? So we can do that, right? And if you don't believe me, get your pen ready because in a minute we're going to walk away from this section and I think you'll find at least 5 stocks that you like and that you would consider trading on Monday. All right? So let me show you how to do this. Let me set you up for success. So Dr. Bart DeLito is the founder of VectorVest, and he teaches us that good portfolio management starts with buying the right stocks. So just like with a sports team, if you fill a team with great players, right, and the thing always comes to my mind is USA Olympic basketball team. Right? If you fill the team with all-stars, just having the great players would help the team do well, right? Even if you're a lousy coach, I could probably coach that team and win, right? So just by filling your portfolio with good stocks, just the good stocks will help you do well, even if you're a lousy portfolio manager, right? So let me share with you the checklist that we use with our clients when looking for stocks to buy. And hopefully you're going to be stunned at how simple it is. We're going to look for stocks whose price is steadily rising with low volatility. We're going to make sure that the company is making money and growing those earnings. And then third, we're going to favor stocks that are undervalued. All right? Let me give you another little quiz. I'm showing you 3 stock charts here. All right? On that checklist, particularly smoothly and steady rising price without a lot of volatility. Which of those 3 meets the test? I know I'm keeping it simple here, but we're going to build in steps. Please tell me that you answered number 3. Right? Rick's the first in the box. Thank you for that, Rick. So yes, 3 meets the test. Here's my bonus question. You know my bonus questions are more fun for me than the initial question. Which kind of price pattern have you up to today been buying? Now I know I set it up so a lot of you are going to answer 3 because you don't want to admit your mistake, right? But this isn't for me. This is for you, right? Have you been buying number 1 because it's moving down? How much lower can it go? It's got to bounce. How about number 2? It's making these big swings, right? It's got a lot of volatility, so I can jump in and out and trade that baby. Right? Well, let's talk about the different approaches here and why buying number 3 makes good sense. Let me activate my pen here if I can make it happen. All right. So we like number 3 because it's steadily rising. I like to say bottom left, upper right, smoother the better. Now, if we look though at the price, this is a 1-year chart, daily candlesticks. The price doesn't just go up every day, does it? It swings, but in fact, here for a couple months, it actually kind of moved sideways, consolidated here, then breaks out and resumes its uptrend. But even in the uptrend, it has pullbacks. It didn't just go straight up. Ooh, this one might have been a little scary, right? But here's the deal. When you're looking at that price action, even the downtrends were not big scary events that were off the charts, right? It was predictable. It was consistent. That's the thing that lets me sleep at night. Give me a portfolio of 10 of these guys and I'll sleep like a baby. Compare that to number 2, where that's a Maalox moment, right? Scotch in my trading desk and Maalox on my nightstand. So I'm preferring this smooth, steady price pattern because it's consistent and it's also very easy to recognize when it's broken down, when it has fallen out of this upward price trend. Now, if you have an objection to this, and I'm going to say it for you, is you might be thinking, well, nice, Todd, but you know what? It's a 52-week high. It's already made its move. Can you tell me how to find it back here? So, fair. We'll talk about it here in a minute. So I want to table that though for a second, just so we can put number 1 and number 2 to bed. All right. So hopefully number 1, we understand it's in a downtrend. How much lower can it go? Well, I don't know. Where's 0? Right. It's in downtrend and it's showing me no signs of reversal here at all. So I'm back in Steve's model where it's just hitting lower highs and lower lows. And all I'm doing when I'm buying the bounces is buying the next lower low. So we don't like number 1. Number 2 is I'm open to the idea at least, because if you look at it over the year, it is up slightly. Right? But the problem with it is that it's been making these big price swings, 20, 30% price swings. So it's an uptrend because it's hitting higher highs and higher lows. But the problem comes, unless I'm a trader trying to jump out, and just grab the move and get out. If I'm trying to hold this for the long term, this is a nightmare, right? We talk about staying in our rational selves. Well, when you watch this thing turn from a 20% gain to a 20% loss, and you freak out and sell at max pain, then all you're doing is locking in the loss, right? So if I was looking at this stock and I was trying to say on a price pattern basis, identify when the price pattern is broken down, well, how about when I put in the lower low, right? So instead of turning, it keeps going lower and lower and lower. I take out the prior low and I go, okay, there's my exit. I just watched my winner turn into a loser and I locked in the loss. And how did you feel on the way? Right? That probably was not a totally rational decision as you watched a 40% swing. Make sense? You say, okay, it wasn't 40, it was 20. Is that better? Maybe. All right. So that's why we prefer the smooth and steady price pattern. So let's talk about this idea that I missed the move. All right. So we've taken the price chart. We've now zoomed it out now over a longer time frame. All right. I've added to the chart this green line, which is the stock's value. VectorVest calculates, and this graph is taken from VectorVest, we calculate the intrinsic value of every stock in the database every day. And that's what this green line represents. Obviously, the candlesticks are the price pattern. And on the bottom, the subgraph, we have the earnings per share data as taken from VectorVest. Now, there's a big difference with the VectorVest earnings data in that we include in our algorithms the 12-month forecast for earnings as provided by the market analysts. All right, and that's why you see daily moves of that number. But the key here is that I'm looking for that rising price pattern, bottom left, upper right, smoother the better, driven by the earnings pattern. Why is that so important? Well, because the fundamental performance of the company, the fact that they're making more and more money, is improving their value. The improving value drives the higher price. So when you think of some speculative company that's not even making a profit yet, there's no engine to drive the price higher other than the rampant speculation of people betting or gambling on what they can do 5 years from now. So we're looking for this price action driven by fundamentals. And in that scenario, when I look at the stock that is here at 30 bucks, right, in October of 11, I come back a year later and it's now at 50 bucks. Right? I'm looking at it here going, well, it's at a 12-month high. I can't buy it now. It's already made its move. Well, has it? Because you come back a year from there and it's gone from 50. Even after a consolidation here, it's now up at 65. And now you come to the hard right edge of the graph, we're now at 90, and all of a sudden the stock that you could have bought back here at 50 seems like a pretty good deal. So when you couple this idea of give me consistent price action driven by earnings and include money management that gets me out of the trade once the price action, and if it does break down, get me out, I'm now putting together the building blocks of a successful system. Aha. All right. So this is all about picking the stock. So remember our checklist. We're looking for that price action driven by earnings. We're favoring undervalued stocks. So let me set you up for success. Remember we talked about Steve before and we had talked to him about his stock pick and he said he's selling it now. The reason that he decided to sell it right then and there is because we had the conversation you and I just had. We said, well, Steve, you got a stock that's in price decline, it's greatly overvalued, and the earnings are falling. What are we trying to do here? Well, this was for him kind of the check double check here, right? He's like, oh, yeah, you're right. I fell back into my old patterns. I wasn't doing what you've been teaching me. Let me just have a mulligan and do over. And of course, we saw what happened, so it's a good thing that he did, even though that wasn't his motivation at the time he said he was selling it. Right? He recognized that he wasn't applying the new methodology. All right, so let's look at applying the methodology because all stock charts don't look the same. So let's look at a couple that are doing what we want them to do. So Covenant Transport's our first candidate here. We're going bottom left, upper right, and that's really look for that pattern driven by earnings. All right? I don't care about the performance. You know, we documented the performance here. That's not the point. The point is bottom left to upper right. If there's a pullback in the stock price, that's okay, particularly if that was correlated to a market correction, like we had the market correction last Christmas. Right? So if the stock pulled back when the market was collapsing, well, okay, I get it. Right? In fact, that's kind of what I expect. But once the market starts to rally again, then I ought to see a resumption of that uptrend. All right, and then I'll buy back into it. So I'm looking for the market rising and the stock. The overall pattern of the stock, though, bottom left, upper right, smoother the better. Southwest Airlines, you starting to get it? Advanced, I mean, that, right? It doesn't get any better than that. That's a Renoir. NVIDIA, even after it consolidated here, finally breaks out and resumes that uptrend. Right? So I get this consolidation, but earnings are still improving. Loving it. Right? So let's do it together with that in mind. I'm going to play another game. Let me get into the VectorVest program here. And this is a thing called the stock viewer. And of course, the market closed early today because of the holiday. So at the end of business today, this is our list of stocks. There's currently 8,200 stocks in our database. We have them listed here not alphabetically by name or symbol or by price or by market cap. They're listed by a thing called VST. VectorVest, remember, we're trying to convey information, not just more data. So we score every stock on a 0 to 2 scale for its upside potential, its safety, and its current price trend. We put those together into the VST score. So by sorting the list VST descending, I'm bringing to the top of the list the stocks that have the strongest combination of earnings growth, safety, and price trend. And of course, I can also compare their price to their value. All right, so using that core piece of analysis, we're just going to focus on their price charts today. So I'm going to graph them all. And let me clean up my graph here a little bit. So what I want you to do is look at that price pattern and decide for me or for yourself whether or not it's going bottom left, upper right, smoother the better, driven by the earnings pattern. As I said, some charts are going to look better than others. I want you to just go with your gut reaction. We're very visual beings. We're good at recognizing patterns, smoothing patterns, recognizing patterns. So let's lean on that. And to force you to lean on it, I'm only going to show you each graph for 3 seconds. I'm going to force you to either write it down or ignore it. If you look at it and you go, well, then that's a no. All right, just pick the ones that really pop to you. All right, so let's take a look. First one, ENTH, and I'll count to 3, 2, 3. TECD, 2, 3. XPEL, if you like it, write it down. 2, 3. CNXN, 2, 3. WCG, 2, 3. WGO, 2, 3. GSB, 2, 3. AUDC, 2, 3. NSIT, 2, 3. UFPI, 2, 3. LABU, it's a ETF, 3x ETF, so maybe not play that one. ALGN, 2, 3. APPS, 2, 3. JCS, 2, 3. TNK, T2, 3. That blue flag means it's just a split, by the way. URI, 2, 3. VIPS, 2, 3. ZBRA, 2, 3. DGAZ, another ETF. And HUM, 2, 3. Pencils down. All right, so we had a couple ETFs in the mix today on ultimately what looks like a down market day, but there's still some good chart patterns in there. How many did you find? And most importantly, how is that different from how you've been picking your stocks? I don't know if you're listening to the talking head guys. Maybe you pay a service. Maybe you talk to your buddies in the locker room after a golf game. I don't know what you do. Maybe your brother-in-law. How is this different? Well, hopefully you saw that it was easy. It was certainly faster. We just went through 20 stocks in about a minute, and I had to talk through it, right? More intuitive, right? You could see just by looking at stock if it had volatility or if it was consolidating, right? And maybe it's a candidate for me, but I'm going to wait for the breakout kind of thing. When you have the right tools and you have the information, it makes the process so much easier, right? And obviously, getting your answers quickly is going to help you be more successful, and it's also going to get it done in this 10-minute routine, right? Because we're not all about looking through 200 charts for the next 4 hours. So let's talk about how we can put all of these ideas together into this 10-minute management plan, all right? Because that, remember, was our goal, is to get a 10-minute routine that we can do overnight at any time of the day, whenever it's convenient to you. Right? If you want to be able to do this at 2 in the morning while the rest of the house is asleep, great. Maybe you're an early bird and you like to wake up at 5. Well, have your cup of coffee while you look through some charts. Right? So, let's bring back in Rob. He was our case study, right? And we're going to show how he went from being overwhelmed and stressed in the financial collapse to how he ultimately fixed his problem. All right? So, let's pick up his letter. He said, before taking that drastic step of going back and getting the job, right? He said, before doing that, I started to do my own research to try to recoup my losses. Spending hours each day in front of the computer, reading articles, listening to so-called experts. Subconsciously, I was only hearing what I wanted to hear. I was now beyond despair. It all looked too hard, and getting back on the job treadmill seemed inevitable. So let me show you how he saved his retirement. He followed a simple plan, his trading system. And remember, early on we talked about how the core, the pillars of any trading system are the 3 questions: when to buy, what to buy, and when to sell. So you're going to fill in the 3 boxes here the answers to those questions for you in your particular trading system. So for Rob, on when to buy, the first thing he knew was that he needed to get a signal, right, that told him when it was okay to be buying stocks. So his first entry was, I need a market timing signal. So we talked about the golden cross for the institutional guys. In the VectorVest system, we have a thing called a green light, which is what he uses in his system to tell him that it's an okay time to buy. He also made sure that the market was continuing to follow through the day he took his trade, and that the stock that he was buying was also following through. Because at the end of that first day, you'd like to be in a place where those positions that you opened all have gains, even if they're small. Because from a performance psychology standpoint, it's a much better, different place, right? Instead of, if you have losers on the first day, now you're worried about when you're going to sell them and you haven't even owned them for a day yet, right? So ideally, we'd like to be up on the day. For the what to buy, well, that was easy. He just used the checklist. Find stocks that are rising in price with rising earnings and are undervalued. On when to sell, there's some interesting talking points here. Again, he used a market timing signal to tell him to get out of the market. So if you remember, he developed this system back in the financial collapse. Had he gone to cash when we issued our confirmed down call at the top of the market in 2007, there was a little bounce in the summer of 2008 before it fell again. Had he gone to cash, he would not have suffered the losses that he did in 2007 and 8. If you remember your emotional state at the bottom of that market, would that not have been worth the price of admission, right? So as his defense against ever having that experience again, he decided to go back to cash when he got our confirmed down call. Now, you don't have to go to cash, particularly those of us who are looking for income. If we go to cash, we just cut off our income. But here's the key. You know the market's falling, so why are you just going to stand there out in the middle of the rainstorm taking it on the top of your head? Hedge the portfolio with option trades or other vehicles, right? Do something other than take the 40% capital loss trying to protect your 3% dividend. Make sense? All right, the second piece for him was that he made sure that every stock in the portfolio had a stop loss. And then finally, he likes to use profit targets, or at least a profit objective, right? This helps him eliminate that greed, trying to get the last, 5 cents out of the trade and then watching it collapse in a sell-off. Right? So he likes to use profit objectives. Again, you can have an emotional response for making too much money as much as you can from losing too much. Right? All right, so those were the answers to the 9 questions for Rob, or the 3 questions. So let's do the personal inventory again. Right? Take your pen and your pencil, put a little smiley face next to each of the cells here, the topics where you're good to go, where you do it well. A frowny face where you don't even think about it or you don't do it well. What are you doing? Again, you're identifying weaknesses in your system because you need all 9 boxes to have smiley faces if you're going to be consistent. Right? So again, just work from the top to the bottom and eliminate the frowny faces, make them all smiles. Once they're all smiles, the way that you apply this in the 10-minute routine actually begins with the when to sell. Right? So stock hits its stop, right? You close the position either whether due to market conditions or the stock is stopped out. What's your next question? What to buy? No. Your next question is, should I be buying? What's going on in the market? If the market is tanking, why would you be buying? When's the last time you heard somebody on CNBC or any of the financial shows tell you, yeah, I'd just stay in cash right now, right? My plan is to wait out the downtrend. No, the industry doesn't operate on you sitting on your cash, right? The industry needs you to be trading and investing. Well, we don't have a dog in that hunt, right? So we say it makes sense when the market's tanking, stop buying. When the market starts rising again, now I'll buy some replacement positions, apply the stop loss, rinse and repeat. So here's the basis of our 10-minute routine. You come in off the golf course or from work or whatever, you open your portfolio. Have any of your positions stopped out? If the market timing system says the market's rising, let's go find a replacement. If it doesn't, log off. Go on a walk. Right? Spend time with your significant other. Do something that adds value to your life because your stock pick probably isn't going to. Right? Because the market's falling. Let's just take advantage. There's an old saying of making hay when the sun shines or whatever, right? Let's just play with the market cycles to our advantage. Right? Rob, in doing this simple system, recovers from his global financial crisis losses. And the key here isn't, that he made back those losses in the time frame. It's not a performance claim. It's an idea that, Rob is very down to earth if you met him, that this is doable. That's the point. That's his point, is he doesn't see himself as anything special. If he can do it, you can do it. And I'm here to tell you you can. And we've been helping people do it for 30 years. All right. So let's pause here for a moment. And I want you to do that little inventory. Hopefully you've been writing down or noting to yourself which of these areas you need to work on first. Right? So you're kind of putting together a little game plan of how to deliver your financial future. So let's identify where you need to work, prioritize them, and get to work. Right? I'm guessing, particularly if you have those lists, that you're not satisfied with the results you've been getting so far. Right? Maybe you've been getting buried by the data. Maybe you've been tired of that roller coaster ride and they're all telling you to hang in through the next big one. Right? A lot of us think is coming. Right? Well, if it does, I now have the tools to build my confidence, right? And if you've been lacking in confidence, you can hopefully see that there's a way to start getting some of that back, right? Maybe you're not where you want to be, but now you can see that there is a pathway to getting there. All right, so the choices become pretty easy. Would you rather be overwhelmed by the data or the morass that you've got from the industry gurus, or would you rather get your answers quickly? Well, that's possible, and it's possible to have confidence. Right? Stop buying stocks that are falling. Start buying stocks that are rising and are likely to continue rising in a rising market, and build some confidence that you can actually do this. Right? And get some consistent performance over time. Right? So, how do you get that? How do you build all that? Right? Well, you have some choices, right? You want to incorporate this into what you're doing, and you can listen to this webinar and many others. there's no shortage of webinars on how to make money in the markets, right? So your choice is take it on yourself, do it alone through trial and error, build up some skill sets, and develop this trading system. You kind of have the roadmap to do that. You can do that over time, but of course it is going to take time, and tuition can be expensive as you make some mistakes, which you inevitably will. So My question to you is, well, why do that, particularly when there's already a system out there that works that you can lean on, particularly when you're trying to work on yourself, right? Getting away from some of those emotional decisions that you've been making, right? We put together a course for folks that are in your situation, and we call it the Successful Investing Quick Start course. We put it together for folks who are looking for a way to consistently outperform the market without a huge investment of time and can get there quickly, right? So we put it together for serious people who are looking for that simple way to buy the right stocks at the right time and know when to sell them, right? Which is too many people talk about knowing when to sell, right? All in the effort to see steady, consistent gains, remove that frustration and anxiety from managing your own portfolio. Einstein said everything should be made as simple as possible, but not simpler. What I want you to get here is that I'm not trying to say that this is some kind of magic pill. What I'm offering you is a way to provide for your financial future in perpetuity. As long as you stay lucid enough to push the buy and the sell buttons on your computer, you can control your financial destiny, right? But it's going to take some work, right? I'll teach you, but you need to be a good student. You need to learn, right? So it's going to take some effort on your part. If you're not looking to put any effort into it, then this isn't for you. Go back to your email inbox and take that penny stock thing that promises 400% in 2 weeks, right? Just log me off. What I am offering you is a way to take your investing seriously, put in some time to learn a system that you can apply. Whether you stay with VectorVest or not, you'll learn how to trade, and you can use that wherever you go for the rest of your life. All right, but the idea here is using this 10-minute routine, you can provide more money, more financial security, and more freedom to do the things that you want to do, where you want to do them, and when you want to do them, right? So we put together the course. If you're interested in doing that, let me tell you a little bit about it, right? Again, it's for serious people, so you'll start seeing more consistent gains right away. We put the course together in modules. Now remember, this is a quick start course. So we're trying to give you enough information to be successful and to turn the ship in a relatively short time frame. All right. So first module is all about being able to analyze stocks in 30 seconds, right? Similar to what we saw in our exercise today, lean on the VectorVest system of analysis to find good candidates, right, in a relatively short time frame. Secondly, you need to know when to sell. So we're going to teach you how to weed your portfolio of the dead wood you've probably been carrying, right? We find a lot of people that have those stocks that they've been holding on to for years, hoping and praying that they're going to come back, right? So we're going to teach you how to know when to sell your stock positions. Module 3 is about knowing when to buy, so it's all about market timing. Module 4 is picking the best stocks out of your list of candidates. And then finally, putting all of those together into a 10-minute routine that you can do on a daily basis, which of course is why we called the course what we called it, the 10-minute investor. All right, so if I was going to teach that to you, right, individually, one-on-one, VectorVest would charge you $475 to do that. Well, that's cost prohibitive for most folks, right? Particularly if you're not familiar with VectorVest. So we don't do that. What we like to do instead is take the first step. I'm going to teach you over the next 30 days how to use VectorVest to turn your portfolio around, right? Even if you've had no success or limited success, or maybe you're just brand new, I'm going to teach you this system over these 5 modules and let you prove it to yourself. All right? To do that, we don't charge you $400. I charge you $10, $9.95. Right? And the idea here is I'll make the first step. Let me show you the system. Let me prove it to you that it works. Let me let you prove it to yourself, so you don't have to take my word for it. If you're interested in taking the course and let me prove it to you, go to vectorvest.com/SIQSC. All right, you'll have the order page there to give us your contact information, and we'll get you started on the program. To do the program, we all want to be on the same platform, so we're going to give you 30 days of access to VectorVest. All right, the VectorVest system then is going to be universal, so we're all trading the same signals, looking at the same lists of stocks. Okay, if you stay with VectorVest after the 30-day course, then you can get VectorVest on a monthly or annual subscription. All right, monthly starts at $69, goes up to $129. But you don't need to lock that in up front, right? But you do need the tools so we can teach you how to use it. As I said before, to be successful, you don't have to have VectorVest. If you leave after the course, you'll have all the tools or all the information you need, right? The second thing you get with the course is attendance to our weekly group coaching sessions. This is the thing that I talked about before with Steve, right? That weekly group coaching is where we get together with our subscribers who are in the course and we talk about what you're learning, right? Whether you're on module 1 or module 3 or you finish, it doesn't matter. We get together with our clients on a weekly basis and talk about what you've been learning. All right, whether you have questions about how to apply the system or particular stocks, whatever you need to, wherever you're struggling or need help, we're there to help you on a weekly basis apply what you're learning in the program, right? And it's that kind of feedback loop that kind of saves Steve's bacon on that trade, right? So we do those weekly trading episodes. Tom was one of our early adopters in the program, and the key thing for him was that once he took on this written plan, once he adopted this idea of a written plan, a systematic approach, that's when he saw his performance turn around. Now, we have lots of folks who've given us testimonials over the year, and I'll save you the time of going through all of those. But, you know, we have footprints in the sand, as so to speak. We've been doing this for 30 years, so you'll find that we've helped a lot of people be successful in the markets. All right. Another thing I'd like to share with you is a hand-picked list by our staff of 30 stocks that are exhibiting those price patterns we saw earlier. Right? So it's a great way to go through that list and get some practice at looking at stocks that are actually doing what you want them to do. Right? So that can be helpful too. That's a freebie for ordering the course in the next 60 minutes. All right, and you do that at VectorVest.com, SIQSC. All right, so remember we talked earlier about the mistakes that you may have been making, and I asked you to think about how much it actually cost you in real dollars. Was it more than $9.95? So this should be a no-brainer, right? If you're struggling at all, I can't imagine why you wouldn't want to take advantage of this program. It's the cost of lunch, right? Eat a bologna sandwich one day and you paid for it. All right, so here's the course, 5 modules. It's not a heavy lift. They're all recorded, so you can watch them whatever time you want to, as many times as you need to. Come to the coaching session and ask any questions that you have. It's not a heavy lift. Each session is about 15-20 minutes, so you might have an hour and a half total for the whole course, right? This is a quick start course. We're not trying to weigh you down with some heavy coursework. All right, but that's my offer to you. Give me 30 days. Let me prove it to you, and let you prove it to yourself that you can actually do this, because I promise you, you can. All right? We do also offer a 30-day money-back guarantee, and I want to qualify this. Right? I've been doing this now for a dozen years, and I've had folks that come to the course, they don't do the work. They come to the Q&A and they're asking non-productive questions. I don't want to say there's any stupid questions, but it's obvious that you haven't even opened, right? You haven't done the work. So if you do the work and you say, well, Todd, this just isn't for me, right? I'll refund you the $10 if you want. I've never had anybody do that, because the educational value of the course is worth the $10 in and of itself, regardless of its impact to you in your financial future. But if you're not familiar with VectorVest, hopefully that guarantee helps you have confidence in us as a service, because I know there are a lot of folks out there that make you question it. Right? So let's leave it at that. So that's the course, the modules, $10. If you will give me a shot, let's see if we can't turn your portfolio around. All right. So thank you for your attention today. Let me hand out that PDF that I told you I might forget. I didn't. How about that? And that's in the GoToWebinar toolbar handout section. Coming through, you do have to have PDF Viewer to open it, but that's a freebie also off of the interweb. All right, so that should be available to you now for the grabbing. For those of you who have to go, I appreciate that, and I appreciate your attention. For those of you who want to stick around, I can take any questions that you might have. And the first one I'm going to start with is, well, okay, once I fill out your little order form, what happens next? Well, let me show you what happens next. So when you put in that the order for the course, we'll respond with an email receipt and a username and password. When you first log on to VectorVest, you'll open up to this Welcome tab. On this Welcome tab, there's a couple resources, but we give you a little guided tour to build a watch list, and that's very helpful as you're learning the VectorVest system of analysis. All right, and we'll refer to that several times in the training. The course itself is on the training tab. The Successful Investing Quick Start course. This is where you'll spend a lot of your time. You can register for our weekly coaching sessions by clicking that link. We'll also send you an email invitation to help you register that way as well. Those sessions are on Thursdays at noon Eastern. We record them. If you have schedule conflicts, we record them so you can get the benefit of having participated. If you like, you can send us an email as a question and we'll include it in that presentation. Or you can go to our product support team and get the answer immediately. It's a toll-free number. They're here from 7 to 11 Eastern every day. We fully support this program, not only this course, but the program itself, because we recognize that our success is tied to yours. Right? We live on subscription, so we need people to subscribe, and if you're not being successful, you're not going to stick around very long. The good news for you is we've been doing this for 30 years, so we're on something. Right? So let us bring you along. All right. So go through the course, and like I said, if you don't make it through all 6 videos, that's fine. Just come to the coaching session wherever you are. If you've made it through 2, that's fine. Come to the coaching session. And by the way, it's much more of a community kind of event, right? Where we encourage and get the participation of the people in the room. So every session we begin by inviting people who are new to the room to say hello. So please take advantage of that. We're not going to embarrass you. There is no hazing ritual that we go through. We just like to know who's new in the room, and we give you all the loving support that we can. All right, so make sure to say hello once you get in the session. All right, those of you who are in the room that are already VectorVest subscribers and just like to hear me talk, all right, you already have this access to this course on the training tab. So if that's you, just watch the videos and come join us on Thursday. You don't need to buy anything. You don't need to sign up for the course. You already have it. Those of you who are outside of the U.S., we do have Canadian version, UK, Europe, Australia, etc. Right? So those of you who live outside the U.S. will get your home database as well as the U.S. database, because we recognize there's a lot of crossover. All right, so you're not left out in the cold. It costs you the same $10 U.S. All right, and let me look. So it's on demand versus particular time and date for the course. Yes, JJ. So you can watch those videos whenever you want. The only thing that is scheduled is our coaching sessions. But as I say, we have multiple venues for support if and when you have those questions. A lot of times I say, You can wait till Thursday to hear my answer, but if it's Tuesday, do you really, right? Give us a call. It's toll free. Get your question answered so you can move on, right? But we're here to help you however you want to be helped. Michael, are we familiar with option sellers? So let me do this. That's kind of a twofold thing. First of all, I don't like to characterize us versus anybody. $10, come and see, and you can make your own comparison. Secondly, I do get a lot of folks who ask about options. And one of the things that maybe strikes you is, as you look at the VectorVest program, you got all these tabs, right? So the VectorVest program is helping the full range of investors, everyone from buy and hold investors to day traders and option traders. So it's a very powerful tool. We're not going to use more than 30% of those capabilities in this very basic approach, right? So the good news is, first of all, everything you need to be successful is included in the $10. There's no upsells here, right? And so you can have a very successful financial future just with the basics. If, however, you want to swing trade or trade options, those tools are here for you to use, but we're going to focus in this course just on basic stock investing. Okay, we're going to make sure that everybody has their fundamentals in hand, right? Because if you're struggling for consistency, we need to identify the weaknesses in your game, right? So let's get back to fundamentals, make sure that we can walk before we start trying to run. Jerome, we do record those Thursday sessions. They are archived in the GoToWebinar tool. All right, so nothing else to pay for. We are not a brokerage house, Phil. What we do have, how do I answer this? Typically, most of our subscribers will have an online discount brokerage. Some of those brokers are connected to us digitally, right? So, for instance, in the U.S. market, and it changes by market, but we have relationships with Ally Interactive and TradeStation brokerages. And that means that you can create an order ticket in VectorVest and transmit right into your account. For those of you who aren't trading with those brokerages, that's fine. You would just simply say, well, okay, I'm going to buy CNXN today, and create your order in your online brokerage account. All right, but we are not a broker. We're not executing the orders. We're just transmitting them. All right, so let me do this. I'm going to put a tag here. If you have a question, because I know I'm here alone and I haven't been able to monitor the questions as closely as I might like, if you have any question that I haven't answered, let me give you a second to copy and paste and repost it, because I want to make sure that I take care of everybody. Otherwise, I will bid you good afternoon, and again, thank you for attending, and hope you have a great rest of your weekend. By the way, the replay of this will come to you via email. That link is active only through the end of the weekend, right? So if you want to watch this again, just do that before Sunday night. All right? Pierre, if you're already a subscriber and you want the list of 20 stocks, give a product support a call. They can forward that on to you. All right. All right, folks. With that, we'll wrap it up. Thank you again. Have a great weekend, and we will see you on Thursday. Bye-bye.